out at the start of the week was USDA's Prospective Plantings report. Kenny and I previewed it last week. We had a viewer ask questions about what these numbers potentially mean in terms of inputs for producers. So let's talk a little bit corn and soybean acres as we look ahead to 2025.
Sure. So the big news, corn acres, 95.3 million acres of corn on the report. And of course, this is a report. It surveys farmers about their intentions to plant this year. This does not mean these acres are already in the ground or anything like that. This is, as the report says, prospective plantings. But a lot of corn, Meghan. That would be a 5% increase, nearly 5 million acres higher than a year ago. Most of that came from soybean acreage. Estimated, the report showed a decline of about 4%, so down to about 83.5 million acres. And you remember it wasn't that long ago we were talking about whether we would plant more corn or more soybeans. That's just a couple of years back now. And so corn clearly back to being king in 2025. That definitely has implications for cattle producers. Corn, of course, is a primary input for the feeding sector and for all cattle producers who supplement feed. So this is, generally I would take this as good news for cattle producers. A lot of corn, plentiful supplies is a positive thing on the input cost side of cattle production. And I think that this report kind of bolsters that a little bit.
On the flip side, on the hog side of things, looking at less soybean acres, and obviously weather is going to be the ultimate factor in what ends up going into the ground. But thinking about input cost and maybe some risk management, and is that a conversation maybe to be thinking about as well?
I think so, yeah. And on the hog side, you're right to point out the decline in soybeans. These prospective plantings, it's a really important report. And, these come out, the next one we get will be the acreage report in June, or I think that one's called acreage, right, Meghan? I get them, and then we get the final report later in the year. But we can definitely see some shifts between now and what actually goes in the ground. But margins are really tight for row crop producers. I'm sure you've talked about this with plenty of folks. There's not a lot of different directions that these producers can go right now. So we're seeing that shift, and livestock producers, have to be able to react to that and think about input cost on their side.